Today is May 24th, 2011. This is our Forex blog. Sometimes currencies go up too much over a 2 or 3 day and sometimes 5-7 day period. The dollar and the yen both had uptrends starting today, but for the most part were weak. You had a counter trend move down. You can clearly see with the yen, the dollar, a lot of weakness, very little strength. A lot of weakness, very, very little strength. A lot of weakness, half. If a currency is up 3-4 days in a row and you're at in this case, let's say you wanted to buy the euro dollar or pound dollar today near the lows, if the currency that's longer term trend is up is having a lot of weakness, you can do that. The euro dollar was strong. The pound really was the strongest one. So from 2 onward, you want to be looking to buy the pound dollar and also buying the pound yen. One thing that also led to the pound exploding up is on the 4-hour chart. It had a trend reversal signal an hour before the ultimate low. If you put our trend reversal signals on here, anything over a 15-minute bar, these things usually within half an hour you get a reversal. Maybe it wasn't the pound dollar, maybe it was the pound yen. Thought I saw one of those on my it might have been. Well, sometimes if you're on a different data server, you get signals, and other times you don't. I saw one on my machine at home. The E signal might be having an issue right now on this particular bar right here. It's not much we can do if the server is giving different data. So on mine at home, I got a counter trend buy signal right here around 6100. And so looking at the bottom today in the I got that signal right around midnight right here, and saying that on the 4-hour chart there was a likely reversal to the upside. So at that point, if the market comes down and double bottoms down there, it becomes pretty safe to buy that. Now on the way down you have a lot of weakness, and then it all but falls away on these last 2 bars. If you get a longer term signal that says look to buy the lows, wait for the weakness to disappear like this, or a little bit after 2. And when it breaks out right here, you go long. And you might have got out of your trade here because there were some counter trend sell signals there, but you made about 30 pips. The market continued up and then had a nice little pullback. You go long right here. And that one, when it went back up, didn't have extreme strength again, so you might have got out of that with a small profit. It goes sideways here, no pullback whatsoever. You go long again. Notice the extreme strength all but disappears right here on this bar. You get out at the upper containment band, pulls back again. I'm not sure if I would have bought this one because it just looks topped out right here. We had another counter trend signal show up right around 8 o'clock. That on the hourly chart, it was the end of the move. And so that means usually at some point after that, you can see right here on this chart right here, actually at 7 o'clock, it had a counter trend sell signal. And so at that point onward, you can really look for some counter trend trades. I got into one of mine a little bit early, made 7 pips on the first one, should have taken 7 on the second one and then scaled in. But anytime you see a longer term counter trend signal, you can usually short near the highs, and especially short at the upper fib targets above those previous swings. So you have that swing there, you also have the previous explosive swing right here, and I took 7 pips here and had the opportunity of taking another 7 or 8 on this one. Kind of scaled into my trade and had to scale in up here at the high and got out with just a few measly pips right here in this bar. But what I should have done, and the safest way to counter trend trade is try to sell the double tops right here, and when it pulled back, it wasn't going down anymore. You can see there wasn't any real weakness. I should have gotten out of that trade. And then when it comes back up to the area, get short again somewhere around 85 up to the whole number, and our fib level was up here. If you look at a 4-hour pound dollar, this went right to the fib level of this big move. It's right near the 618 fib target, or Fibonacci retracement level. So it was a very high probability place to sell up here, given the fact that the weekly monthly trend was down. But until it gets to an extreme, the pound was strong today, the dollar was weak, and you want to trade it on the upside. Once it gets once you start getting some longer term hourly counter trend sell signals, it becomes a little bit more difficult to trade. You want to continue trading with the trend, which you can see in this case worked, or do you want to wait for it to get to an extreme level, scale into a trade, and kind of ride it back down? Pound yen was also extremely strong today, and you can see this one kind of started the day off kind of going sideways. The longer term trend's down. When you had this narrow range pattern right here, you would have went short right here, went right down to support. We have a weekly and a monthly pivot level down here, and you can see the weakness kind of just fell off a cliff. And so when it went back above the hourly, you might have bought right here, you might have bought this pullback here, but the safest trade was when the market went up again, it had no pullback and stayed above the hourly. When it broke out of this range here at 8, you got all the way up here as your potential profit target. There's no resistance anywhere close. This is one of those trades that's probably 60-70% likely to work, because you can see as it goes sideways right here, there's no weakness, a little bit of strength. The weekly and monthly trend are down, which is the only downside of this trade, because today was a counter trend day. But you get into that trade and it just, you can see extreme strength on the way up. And this little pullback right here is also a no-brainer. Extreme strength up, almost no weakness on the pullback. You get into it right here. It's not as good as the first one because the potential profit targets is double top right here at 90. But there is a 60-70% odds. If you go back and review this type of pattern, you will probably come to that same conclusion. That's my opinion. I'm not stating that as fact, but in my experience, that's the odds that I've calculated it to be. And when you're wrong, you're going to lose 10 pips. If you're right, you have a good chance of making 20. And this one went up a little bit further and went sideways, so you might have actually made another 10 on there. You risk 10 to make 30, and you can see the strength pretty much told you to do that, and the weekly trend had shifted up right around 8 o'clock, so that added to your probability. The CAD, extremely weak today. The Swiss, very strong. The dollar also was weak. You don't want to trade two weak currencies against each other. It's just, it becomes difficult to trade. Look at how choppy this is with almost no clear direction. But if you would have traded the weak CAD against maybe the strong euro or the strong Swiss, let's take a look. CAD Swiss is very likely to fall, and of course it does. You have one that's very weak, the CAD, and the Swiss is very strong. Notice how it went down to a trading zone likely statistical low and it found support. That's a good place to get out of your trade at. The pound also was strong, weak Swiss. So this one's likely to, oh no, I'm sorry, the CAD was, pound CAD. Yeah, you can see this one went up. Strong pound, weak CAD. And once the currency is above the hourly, it's more likely to go up. This one found major resistance at the 20-day moving average weekly pivot level and came up to it again, didn't fall lower. When it broke out right here, the upper containment bands, the trading zone right here, and our next trading zone, which was ultimate high. So these, you use the support resistance to decide whether it's worth the risk. In this case, you buy here with a 10-15 pip stop, and your likely profit target is likely at 5,800. So it's 30 pips away. You risk 10 pips to make 30. In this case, it worked. That's a high probability trade. Now the Euro CAD would have also been another good one to trade. Strong Euro, weak CAD. The Euro wasn't quite as strong as the pound. You can see it kind of went sideways here and broke out. It's not as good a trade because the likely profit target's a lot closer. So your risk is the same, but your likely profit target's less. And you can also see not anywhere near extreme strength on this one as compared to the pound. Let's also look at the euro yen, which, the euro had mostly strength today. In a perfect world, you want to find one currency that's extremely strong, like the New Zealand, the daily, weekly, monthly trends up, and trade that against one of the weaker ones. Today, the CAD was the weakest. And when all the time frames line up, you really have some explosive trends most of the time. So the New Zealand CAD also would have been an extremely good one with the highest odds of going up because all the time frames were in your favor. And so this one kind of broke out of a multi-hour sideways range down here, and it went up, almost 100 pips. If you didn't get into that trade here, seeing it go sideways for 2 hours, that's a very high probability trade. You're in this right here. and most of the time the fib target of the first wave up is where your profit target is going to be, especially these super strong ones. So I would have got out of the whole trade right here, no longer, because it's above the upper containment band. I probably wouldn't have bought this next move, but if you did, you want to draw your fibs on that last wave and really consider getting out at the fib targets. And this level right here is a high probability. It did shoot another 15 pips up and then came crashing down. Usually when a currency is outside the containment bands, it almost always reverses. It's just a matter of when. Sometimes it reverses immediately, and other times it can take 8 or 12 hours before it pulls back inside the bands. And sometimes it goes up here and goes sideways, and the bands retch their way up. And so if you short up there expecting it to always return, sometimes it doesn't, but the majority of the time it does.